Good morning, everyone, and welcome to this session titled Growth Drivers. Now, the COVID 19 disruptions have created demand and supply shocks in the global system while unlocking new opportunities for growth. Nigeria's businesses must be pragmatic in capitalizing on these new growth drivers and intentional about nurturing them as new frontiers and making the right investments with the appropriate policy environments and incentives. Now, I have an array or a good number of speakers on this panel. I'm so excited. I can't wait for us to dive in. And I shall list my panelists right now. Dr. Omobola Johnson, Mr. Anthony Oputa, Mrs. Fola Laoye, and Mr. Nasir Yamama. So we're just going to dive straight into the conversation, and I'll be kicking off with Dr. Omobola Johnson. Dr. Johnson, good morning.
Good morning. Good morning, Chimwe.
So the only sector to average double-digit growth over the past 8 quarters is information and communications. Its core element, telecoms, has benefited from lockdown across the world. Mandatory working from home has given a major push to demand for its data and other products. IT infrastructure is relatively weak in Nigeria, and the sudden dependence on IT related services further exposed existing weaknesses. So, I want to know, in your view, what immediate steps should be taken to fix infrastructure deficit within this sector?
Thank you very much, Chimwe. It was a little bit hard to hear you, but I think what you said was that, what are my suggestions on immediate steps to fix infrastructure? I'm really glad that that's the first question that you've asked on this panel, because if we don't have the right infrastructure, then in terms of trying to build a digital economy, we just can't do it, because if the infrastructure is not there, people don't have access, they don't have good, fast, reliable internet, then we just can't build a digital infrastructure. And so you're absolutely right. There's been an accelerated dependence on infrastructure. And even before COVID-19, that infrastructure was actually insufficient for the whole country. And it was also quite vulnerable. We're still faced with things like fiber cuts, power issues. I remember in the very first few days of the lockdown, there was actually a fiber cut in one of our undersea cables, and that slowed down the internet tremendously. And of course, when people are at home and wanted to work or wanted to be entertained, having a fiber cut was a major issue, and there was a real struggle to try and fix that. But there are a number of things that need to be done. I think the first thing is to make it easier for the existing players, the telcos and the infrastructure providers, like the main ones, the IPNXs, to be able to lay this infrastructure in an easier manner. It's actually very difficult for them. There's a lot of, at the subnational level, there are a lot of illegal taxes, there are a lot of indiscriminate taxes, because people see the telecoms industry as one that is almost like a cash cow. So these people have a lot of money, and so they tax this, as they're laying the infrastructure, they tax it. There are instances where, the price to lay, the right of way to lay fiber is actually more expensive than the fiber that you're laying itself. There are instances where state governments have gone and they charge you, they tax you per base station, and then they backdate the taxes by 10 years when the base station was there. So all of these things need to be managed, and it's a shame that we're still talking about it. I know we're talking about this when I was a minister of ICT, and we're still talking about it now. So we need to really come together with the subnational governments and ensure that it's easier to lay this infrastructure for everybody. I think also that's for the existing players, making it easier for them, making it cheaper for them, because what they do is they just pass on that cost. And so when we talk about high data costs, it's because they need to pass on some of these costs that they're faced with to the consumers. And the second thing we need to do is actually make it attractive to new players, people that are actually coming into the infrastructure, IT infrastructure role now. So for instance, we see some of the OTT players, Facebook, it's in their interest to have more people having access to data, good, reliable internet data. So we see companies like Facebook and Google actually making investments in the Nigerian infrastructure space to ensure that they have more consumers, more people are connecting to their own particular applications. And so again, making it easier for them to collaborate and to partner with the existing telco infrastructure players, and also to make it easier for them to actually come into the country to deliver some of these infrastructure services. there's some things that happened during lockdown. I think we also need to be, third thing I would say is that we need to be sort of more creative and innovative around infrastructure. So for instance, during the COVID-19 pandemic, especially during the lockdown, some countries were quite innovative. Spectrum is a lifeblood of infrastructure plays in the telecoms industry. And what a country like South Africa did was actually made more spectrum available to the telecoms operators free of charge, because they knew that they had to get the bandwidth a lot more, they need to increase the size of the bandwidth that was going out to the country. So they gave the spectrum free of charge, but it comes with conditions. We'll give the spectrum free of charge, and you will have to roll out in X number of days. You will have to roll out to this particular part of the country. And these are the kind of innovative and creative things that we can do, not only to have faster and cheaper data, but also to ensure that we have access to the internet across the country. Because right now, those of us in Lagos, Port Harcourt, Abuja, and many of the Kanos, many of the sort of bigger cities, we have reasonably good access. But when you leave these cities and you go to other parts of the country, the access is not so good. So the other thing that needs to be done is that government, or the regulator, let me say the regulator, needs to give incentives for the telcos to go to some of these areas where where the infrastructure hasn't got to yet. And they can do that by being innovative, creative, and incentivizing the rollout of infrastructure to some of these areas. And it's things like cheaper spectrum, it's things like cheaper spectrum for rollout conditions that they have. It's things like, I don't want to use the word subsidize, but actually sort of partnering with them to make sure that areas that are not economically viable, they can actually give some kind of subvention to make it more attractive for the telcos and the infrastructure players to go there.
Thank you so much for that. The next question I have for you is, technology is seen as a catalyst for growth for sectors across the economy. Some say that sectors like agriculture, education, and manufacturing can receive a necessary boost if technology is strengthened. What aspects of the technology sector require attention, investments to enable ample support to other sectors of the economy? I know you touched upon it with what you've just said, but if you can just go a bit deeper on what aspects of
Yeah.
technology, of the technology sector, require attention or investments to enable ample support to other sectors of the economy.
Absolutely. So the other area I was speaking, I've spoken about infrastructure, that needs a lot of attention at this point in time. The other thing that needs attention is actually talent. We don't have enough talent to really fuel and drive this talent and skills. And I'll just be very specific in terms of talent and skills that I'm talking about. It's around people like engineers, communication engineers, data scientists, software engineers, computer scientists. These are skills that are high in demand, not only in Nigeria to fuel this digital economy, but if you think about it, that all over the world, we're all moving towards the digital economy at different rates, and we're all, at different paces, at a different pace, but everybody's moving towards the digital economy. And the skills to supply this digital economy, particularly around the infrastructure and the software development and the engineering, these skills are in very short supply all over the world. And so you can imagine that, in what we need to do to really begin to fuel this economy, that even if we have the infrastructure there, if we're not developing the apps, if we don't have people that are working on these areas, it's not going to make any difference if we have the infrastructure. So really beginning to develop skills in these really sort of highly technical areas. I think, for instance, the point I was making was that all of these skills are in high demand all over the world. If we take software engineering, for instance, there are apparently about 800,000 software engineers in Africa. The large proportion of those are in Nigeria, South Africa, and Egypt. Now, if you think that a software engineer who is in Nigeria can earn, I don't know, maybe 200,000 naira a month, for instance, 2,000 naira a month. But if he actually goes and works in the US or in Europe, he can earn multiples of that. And because we've seen the benefits of remote working, distributed workforces, he doesn't have to leave Nigeria to earn that kind of salary. And what we're seeing right now is that there's an exodus of all these highly skilled people that are actually leaving the country and going to these countries where they're paid better and they have a better standard of life. So really, I think what we need to do is create a bigger pipeline of this kind of talent, the engineers, the software developers, the data scientists, the computer scientists. We need to create a critical mass of these sort of talents that can actually fuel our own digital economy development, but also, we can, because we're a very large country, very populous country, we can also support other countries in doing this. And this is where a lot of the focus needs to be on. It's around STEM, that's really science, technology, engineering, mathematics. We really need to focus as a nation on this, make it a national priority to develop engineers, mathematicians, technology, everything that will fuel the digital economy in our universities, bringing it very early in primary school and secondary schools, learning how to code. It's just so critical that if we don't do this, we're really not going to reap the benefits of a digital economy.
Thank you so much for that. So my next question is, broadband penetration currently stands at about 46%. The ongoing pandemic has led to heavy dependence on internet services, as connectivity is now a core requirement to boost productivity. To improve internet speed, deeper broadband penetration is required. Now, based on the new National Broadband Plan 2020 to 2025, the FGN expects broadband penetration to hit about 70% by 2025.
Hmm.
This seems like an ambitious target. What are your views? Please share pragmatic steps on how this can be achieved.
Hmm. It is ambitious, but it's also very doable. Quite honestly, it is very doable, and I think that I've sort of touched on it. It's about building that infrastructure, making it easier and quicker for the infrastructure players to lay that infrastructure, having the right kind of talent and skills to maintain and to actually install the infrastructure and also to maintain the infrastructure. Spectrum auctions, really making spectrum, or the spectrum that is required for the transmission of internet infrastructure, making it actually a lot more available and making more spectrum available and making that spectrum not as expensive. I think that's also very important. I can understand the reason that spectrum is a valuable resource for governments, and they try and, I mean, the spectrum is sold through auctions and they try and get the best price for it. That's fine. But I think that when you do that and you overprice the spectrum, what it means that when companies buy the spectrum, as you've seen in places like India, they buy the spectrum for these huge amounts of money, and then they don't have enough money to roll out based on the spectrum that they bought. They have to now delay the rollout because they've got to gather more capital. So I think that this is a very ambitious target, but it's a target that we have to achieve if we're really going to move towards being a digital economy. But there are things that need to be done. And I think, like I said, it's around making that infrastructure really cheaper, faster, and quicker to roll out, and really collaboration, engagement of all the people that are actually going to build that infrastructure, and also having a narrative within governments, because sometimes it's really a narrative that actually brings in capital. Because when we talk about this infrastructure, we're talking about billions of dollars that need to be spent on that infrastructure. So a government narrative around stable policies, around regulation that is forward-looking and innovative, that people can understand, regulation that is consistent, that doesn't change every 3 months. All of those things are what we need to do to be able to achieve this. We've moved from 5% to about, I think, 40%. And we did this in about 5 years, I think. So moving from 40 to 75% is ambitious, yes, but I think it's a very doable target if we really place our minds on it and do some of the things that I've suggested earlier. Thanks, Jimmy.
Thank you so much. Thank you so much for that. I'm going to come back to you in a few minutes. So right now, I'm going to go over to Mr. Anthony Oputa. Good morning. Can you hear me?
Good morning, Chinwe.
Good morning. So I'd like to know, there's one definition of financial technology, which is an integral part of technology. That's technology and innovation to improve the access of finance to lower transaction costs and enhance efficiency of the financial sector. We have seen successes in electronic payment systems and how it has contributed to shaping the e-commerce industry. However, with fintech, Nigeria is still scratching the surface. In 2018, Kenya stretched its fintech capacity further as the Kenya Treasury launched the Akiba Retail Bond, the first global mobile-only government bond. The introduction of this bond is to encourage low-income earning citizens to participate in the country's capital markets. Now, can you please kindly share your thoughts on how Nigeria can grow its fintech industry to a similar level seen in Kenya, and what role research will play to achieve this?
Right. Thank you, Chinwe, for that question, and good morning again to participants. I think one thing that is very clear to all of us here is that when it comes to mobile payments, though we use the general term fintech, but I would like to narrow to mobile payments or mobile financial systems, that East Africa is indeed at the forefront, okay? a couple of years ago, through the M-Pesa platform, Safaricom did indeed push and grow this. One of the things that, and it was, when I was listening to Dr. Johnson speak, I noted her comment about the poor state of infrastructure, and you did, when giving your statistics of only a 45% or 46% penetration of broadband, illustrates the fact. However, there is something that is very key to our geography and indeed Africa, which is our population. While we do not have a very strong internet or broadband penetration, we do have the power of our population. And therefore, mobile technologies tend to take faster routes in our environment. Again, Kenya, the Kenyan government, by launching the fund, let me use the word, the e-fund you mentioned, is also being innovative about creating the necessary capital required to drive the growth that the economy that they face has to do while okay, so this is one of the challenges of mobile technology too. Right, so one of the things that they had to do is they consider the constraints of the environment. Okay, so I got muted too. So looking at the challenges of broadband penetration, but high use of mobile phones, I guess you would then, it's a no-brainer if you then think about it that using that platform to launch a fund will be very successful. Just to give a background, I think one of the biggest problems that not only Nigeria, but a lot of sub-Saharan African countries will face is about attracting the right capital or capital formation and investment growth needed to then drive what our post-COVID or the new environment or the new growth drivers that we are looking at. Putting capital at the core, I believe that if you consider some of the things that we've seen, and I would like to share one statistic that I find very interesting. Nigerian, last year, 2018 or 2019, was estimated that the remittances from abroad of the odd 50 million Nigerians in diaspora was about $24 billion. Okay, I saw that on a report I was reading recently. And then for the period 2009 to 2018, the lowest was in 2006, and it was just $19.7 billion. However, a lot of this capital was really used for consumption. People remitted to then do things like pay for education, pay for healthcare, and support family at home. But if you look at the sheer quantum of the amount, it is something that, if properly harnessed, can then provide the necessary capital to grow exponential. And it's about really how do we, the challenge is then how does the Nigerian government or any government at that matter, how are we able to then switch from consumption to investment of these funds? If you consider that roughly for the period in question, average investment was about $3.3 billion, you then begin to understand the sheer potential that lies there. And that is where fintech can play a major role. We saw recently the successes that have been enjoyed by One, InterSwitch, and more recently we heard about the Paystack, the acquisition of about $200 million into Paystack. Because of our population and because of our unique position that mobile financial services are kicking in, this is a potential for attracting. Now, the question is, how can our government, using the necessary policy framework and implementation, to ensure that some of these diaspora inflows can then be channeled as investments? What am I saying? Proper investment outlets. Of course, for those proper investment outlets to happen, there has to be trust in the system. So I truly believe that one other pillar that will help Nigeria today is a service and knowledge-based growth driver. If you think about it, we have a very young population, not just young, dynamic, and very entrepreneurial. And in spite of all the, in quote, archaicness of our educational system currently, we're still able to churn out a lot. In terms of Mrs. Johnson, Dr. Johnson mentioned STEM and the fact that we have most of the software engineers, for instance, if you have a preponderance of them sitting here in Nigeria, however, the attraction to go outside is something that is irresistible. Imagine how we can transform if we are able to, right from our primary all through building the STEM into the curriculum, rejig our curriculum, similar to something that has happened in India, to then generate more people in this space. Not only would we be able to provide the necessary skills for our market, but also be able to service the export of that skills. And so fintech for me is a very good, a veritable path to growth, but we have to be concerted about it. In Nigeria, we're a very policy-rich environment. The problem has always been implementation. And that has to be the foundation of some of the things that we need to do if we are to take these opportunities that present us.
Thank you for that. I agree with you. The problem is implementation. So my next question is, deepening financial inclusion through financial technology can boost investments, reduce poverty, and help stronger institutions with less corruption. To achieve this, there needs to be increased collaboration between telecommunication operators and banks. What is hindering this well-needed collaboration, and how can the bottlenecks be removed?
Right, thanks again. I think, as I mentioned before your question, in Nigeria today, the problem is not so much policies, but the problem is more about implementation. If you think about it, when it comes to mobile financial systems, we actually have a plethora of frameworks, a plethora of policies and procedures that are in place to help drive this. In fact, sometimes I think we might be in a position of an over-regulation. So if you look at the central bank, who is the apex regulator of mobile financial services, and by financial services, having mobile before it only simply in the mind of the regulators, bring them squarely back to the regulatory purview of the CBN. Recently, there was the release of the Payment Services Bank, and it was targeted at not just the Payment Services Bank framework, and it was targeted at not just the telco companies who wanted to then go into the financial services space, but also targeted at entities who have wide agency relationships across the nation to also go into this. There's also the framework that listed how banks and financial and telcos could also go into agency or super agency relationship as a way of providing these mobile financial services, and therefore increasing the penetration of financial services across the country. I mentioned Kenya earlier. You would find that when M-Pesa started, there was quite a significant amount of non-regulation, and therefore the telco in that environment essentially had to evolve how it does things. But there are always the concerns. The concern of the regulator is simply around proper money laundering in place, and to ensure that terrorist financing and the likes are not overlooked. But I think a regulator should be a facilitator, not a hindrance, okay? And when you get into a position where there's an over-regulation, it actually begins to move from facilitation into hindering the business. Fintech today, we're about 200 million Nigerians, and we are dispersed over a wide geographic area. Of course, there are centers of population concentration like Lagos and a few other state capitals. But if indeed we want to get these financial services and therefore the benefits around also investing and all to a wider populace, then innovative solutions around this needs to start happening. And I think this is where the fintechs play a veritable role in this space of financial services. If you think about it today, yes, a few days ago, I was having a conversation with a friend, and I said that we have actually evolved faster than we think. And I used the example of some of the betting companies. If you think about it, the betting companies already operate right down to the villages and hammocks across Nigeria. They already have very strong ways of collecting money. And these days, using USSD and other mobile-enabled technologies, people can actually bet and carry out whatever their desires are in this rate. It's only a small jump from that into providing mobile financial services. So while we may have very poor internet penetration, but again, the widespread of mobile technology and the use of USSD can indeed be a means through which we can then bring financial technologies to financial services to even the most remote parts of this nation. It's really about ensuring that the framework is in place and there are adequate incentives being provided by the government as an enabler, not a hinderer, to ensure that people go to these places that need those services. And that way we will boost further penetration in financial services space.
Thank you. Thank you so much for that. I think my last question for now is, last year, the CBN revealed a policy thrust for the next 5 years, improving the payment systems infrastructure and driving financial inclusion to 95% by 2024 is one of the primary objectives. Is this an ambitious target? If no, what areas do you think the CBN should focus on to realize this target? If yes, how long do you think it could actually take, and what must be done to achieve this target? I know you touched upon some of this in your last comment or answers, but if you can just go a bit granular, I'll appreciate that.
Okay, so I do not think it's ambitious to say 5 years. Like I said before, the speed at which financial technology it's evolving is amazing. And there are already existing businesses in place that can help drive this. For me, for that depth of that level of 95% penetration that you mentioned to happen, there are a few things that need to happen. One, and I refer to the comment by Dr. Johnson earlier, you would expect that one of the things that has made this penetration or what we've witnessed so far happen is really because of the spread of the telco companies, the mobile telecommunications companies across the nation, okay? So in that regard, I believe that, and there's a lot that the regulator and CBN can do, but also there has to be a lot more closer collaboration with other agencies of government, particularly the NCC in this situation. What are the things that the NCC could do to then make it easier for interested telco operators to get to those nooks and crannies and hammocks of Nigeria? It has to be in such a way that they are incentivized to grow, maybe tax incentives to go to Damaturu, for instance. Maybe apart from the tax incentives, there's a local operator in Shani, in Yobe State, who would want who would want to set up a local network. What incentives are available to them to ensure this happens? That is one. So around those incentives could be cheaper spectrum licensing. Okay, I know spectrum license is a major source of funding for the government, and it tends to be very expensive. But in interest of the national interest, we may have to look at how do we make it available cheaper and to those who want to do it. Secondly, fintech one of the key barriers I've noticed, I mentioned the instance of South Africa, of Kenya, when M-Pesa started, there was really little or no barriers to entering. But today, if someone wants to start a payment services bank, you have to find, I think it's 5 billion naira that you need to put in, okay? And that in itself can be a hindrance. So that capital base could be a problem. So again, some of those administrative bottlenecks needs to be addressed. Thirdly, as we begin to think about this penetration, the infrastructure necessary to run across needs to be addressed. And for me, that is the biggest problem. If you think about it, virtually every telco operator today generates its own electricity, and it gets worse when you move into some of those when you move into the hinterland and you move into some of those remote areas. You need to generate your own electricity to keep your base stations and your infrastructure running. And also accessibility in terms of whether road or air transport to some of those places makes it even more difficult for operators to go in there and start. And no matter how much we think about fintech, if the people in those remote areas are unable to access their mobile phones, then everything is still a waste. So for us, I believe it's achievable to do to get to the 95% target. However, we will need to plan around these three things that I have mentioned.
Thank you for sharing those three pillars that you mentioned. So I'm going to go over to Mrs. Paula Larry. Good morning.
Morning. Hi there.
Hi. So health is a core sector for proper socio-economic development. However, the sector has been terribly neglected over the past years in Nigeria. The global pandemic has dragged the sector to the front burner. We all have witnessed the importance of having a strong health system or sector and its correlation with productivity and, by extension, economic growth. Please share your view on the pragmatic steps from both the public and private sectors that can be taken to, one, strengthen the country's health sector, and two, ensure sustainability and avoid further deterioration of this sector.
Okay, great. Thank you. But I'm not sure that I can cover all of that in in this session, just because of how wide the gap is. But maybe to start on a much more serious note, on the point you started with, being the fact that the global pandemic has significantly put the searchlight on health, and health in two ways. Health, as you say, as it being a public good that has a very key and close correlation to economic development. And I think the pandemic has shown us the emergency situation of public health and how that also led to the emergency situation from an economic point of view. But I think particularly, if we're looking inwards at Nigeria, it certainly has shown us, just like the other speakers have spoken to before me, about the real dearth in infrastructure. And I guess the infrastructure required, or that is necessary in health to even keep, to maintain it, then strengthen and sustain, as you've rightly asked, is significant. We know that we are so far away from where we should be. We have a population that is ever growing, 200 million and counting, and yet we have an infrastructure base that is still very much based, sort of in, probably 30, 40 years ago is when it was really developed. And therefore, the shortfalls are shortfalls in, if I talk about hospital beds, something like 375,000 short of hospital beds. At the time when COVID was hitting us significantly, or hitting the world significantly, shall I say, in March, we were all extremely concerned, because at that time, the numbers were showing that we only had 400 ICU beds in the whole country, intensive care beds. and of course with all the necessary equipment, attached. We also knew that we had a significant dearth in number of, medical professionals, given that healthcare is a highly skilled sector. We knew we had a shortfall of over 90,000 doctors and somewhere around 300,000 nurses. And I guess, of course, the concern, I guess, for those of us who work in the sector have been twofold. First and foremost, the fact that, as I said, yes, the infrastructure was developed, sort of post-independence, but then we got to a point where development stopped from the public sort of sector's point of view. And therefore, a certain level of decay has also set in. But more importantly, too, has been the development of the human capital and the loss of it. So, we saw again a very sort of strong growth of medical schools and medical colleges around the country. But of course, as we developed them and created the pipeline, they became the first port of call, for other countries, which has led to a significant brain drain, just like Dr. Johnson was speaking about is happening now with IT and ICT professionals who really are, it's a global market and can therefore apply their skills and their trade elsewhere. This is something that we have, had to deal with as a health sector over the last 30 years or so. So I think that joint, situation of, dearth of infrastructure, as well as the brain drain, has really left us at a point that is one of our lowest. I know that WHO sort of middle of the pandemic around May, June, had published numbers that were extremely alarming for Africa. They felt we were going to have something like 250 million COVID positive population, and we were going to, deal with over 1 million deaths. And a lot of that was also due to the lack of infrastructure in the health space. I mean, thankfully, we haven't seen that sort of picture. I think we've probably seen 1,000 deaths across the continent, and certainly, 1,000 deaths in Nigeria, but certainly, a number that was way below what we thought across the continent. So that has helped. The fact that, yes, it seems like we had some level of resistance to COVID-19 has helped us significantly, but clearly, we realize the need. The other key issue too has been the fact that because of this dearth of infrastructure and services and skills, it has led over the past 10, 15 years to a significant level of medical tourism. With those who can afford it, taking their dollars literally and voting with their feet and going to other markets to purchase healthcare. And those numbers too have been staggering, something in the region of $1.5 billion a year is what's been leaving the country. But again, COVID has shown us that, look, with lockdowns and the fact that, we are now a lot less, mobile, as well as volatility, the economic volatility with volatility in FX rates and so on, has meant therefore that certainly the time is now that we do have to, look inwards. We do have to build what we've got locally, so that we can create a supply side that can begin to meet what I'll call a burgeoning demand. Demand has been a key issue for the healthcare sector. Demand, years ago was paid for literally by the public sector. So the public, the government paid for healthcare. Healthcare was very much something that was free, and therefore, was coming out of those coffers. But again, in the last 20, 25 years, we've seen that shift where now, payment for healthcare is coming more out of pocket, out of, the population's pocket. Something like 70% of spend is out of pocket. And that has created a challenge really in terms of what can people afford, at what time, normally the healthcare cost comes to them when they can afford it least and so on. And we've hoped to bridge that gap with insurance, hoping that health insurance would really help to stabilize and grow the market. And that's something that we have seen across Africa. We've seen Ghana with a penetration rate of about 30%, Kenya about 20, even South Africa is close to 20% penetration rate. Unfortunately, in Nigeria, we still have a penetration rate of health insurance at less than 6%. And that's something that we still need to work on when we think about the areas of strengthening the system, that we do need a health financing system that is market-led and demand-led through a health insurance system that creates a, access and an equitable access to health services. With that in mind, and as we think about that, we have to think about policy as well. Certainly, we had the National Health Act in 2014, which has been implemented, and where funds are coming through now for what you call the Basic Healthcare Provision Fund, which from the government's point of view should fund for primary healthcare, and very rightly so, because primary healthcare being the biggest layer of care at the bottom of the pyramid is extremely key. But also now putting some money into what we call a catastrophic healthcare fund for the more specialist services like cancer and other non-communicable diseases. Now, having that policy framework from government side and for government to really be strategic about putting more funding on the table into healthcare in this way is still extremely important. Because we do need, especially when it comes to primary care, it's something that still needs to be very much funded by government, as is the case in most countries of the world. It's very difficult to fund primary care totally from private pockets or private investment. And therefore, that's one area of policy that we hope will sort of become more sticky. Generally, yes, the overall spend, as we said, the government is spending 30% of our healthcare, of spend of the country right now. It would be great to see that really increase significantly. South Africa at the moment has just put together a very audacious and ambitious goal, which they put together a year ago, of really growing and moving towards universal health coverage. And it's going to cost them $17 billion a year, every year till 2026. And that is the commitment they are making to really help to grow the demand, for healthcare in their market. So it'd be great to see some kind of big, audacious goal from government's perspective. Then we talk about what can we really think about from a more investment and sustainability perspective. Certainly, I mean, healthcare is something that always delivers jobs. And we know that jobs is something that we need in this country and this economy now. The numbers are showing, McKinsey published a study that shows that across Africa, given again the growth of the population, healthcare is expected to become a $260 billion market by 2030, with the ability to create 16 million jobs. And of course, Nigeria, is always taken to be a big share of that. So I think that is a goal, but again, it's a goal that won't happen totally by itself. Some of it does, just because, again, of the sort of level of consumption that is, unfettered. But certainly having a much more structured approach to making that happen and creating the jobs is key. From a private investment point of view, I believe that the investment is growing. Again, across Africa, we've seen private investments in healthcare grow from less than $100,000 in 2005 to something around $1 billion today. So we know that we can garner the investment. We know that, yes, we need the investment to be much more patient in terms of being more patient capital, but certainly seeing a demand side that is robust, seeing government policy that also is growing alongside that, I think will certainly help to, to give the confidence for investors to really bring their money to really not just strengthen the sector, but also, help to sustain it.
Thank you so much for that extensive response. You were able to touch upon medical tourism, the brain drain, and also the health financing from out of pocket. Thank you so much for that. I shall come back to you shortly. Now I'm going to go to Mr. Nasir Yamama. good morning.
Good morning, Shirley.
Good morning. So there are specific sectors such as manufacturing, the creative industry, and of course agriculture that have been identified as growth engines for the economy. In what ways can technology assist with boosting growth across these sectors that I just mentioned?
Well, I'll probably start with agriculture. We very well know how complex and multi-layered the value chain of agriculture is, and also how far-reaching it is, because it affects almost every other sector. Now, when you talk about technology in agriculture, you're not just referring to information technologies or even machinery alone. It's also multi-layered and multifaceted. I'm referring here from opportunities in biotechnology, to the machineries themselves, to the service economy, and to technologies in logistics and other things that are obtainable. So really the areas of applications are inexhaustible in agriculture, as it is with the other sectors you mentioned, like manufacturing. But particularly, you can clearly see almost every sector being present in the agricultural value chain. If you talk about manufacturing, we've been harping or really, clamoring for local manufacturing when it comes to tractors and other machineries that could be used, even simple handheld farm implements. That has an incredible opening or opportunity that has not and is not even near being filled. So that is a great area. And then if you look at it, when you talk about manufacturing on its own, there's also an enormous dearth. Recently, I think in the last 2 years, we tried to start a kind of a manufacturing services company here in Nigeria. And we were talking with partners regarding automotive engineering and regarding simple processing, some agricultural processing equipment. And some of the greatest challenges we have are not technical. It is not the lack of the ability to do it, but the seeming, I think, disbelief or lack of confidence in what is made in Nigeria. And any manufacturer would tell you the same thing, from the biggest one, maybe the smallest ones that make little handheld implements. People are happier buying things, even substandard things, from China, mostly because it costs less, yes, but also the whole attitude towards things that are made here is quite wrong. And so the opportunity there cannot be overemphasized, and it hasn't been filled. It's not even, we're not even on the right path when it comes to, utilizing the opportunities in terms of the market base we have, the number of people that could utilize what we have, and the access we have to even regional markets that we could easily export to, and that could mean meaningful foreign direct investments that the country is in a dire need for. So the opportunities are immense.
Thank you for that.
Yeah.
So my next question would be, agriculture has benefited from several FGN or government interventions. However, there seems to be a misalignment when we consider the investments injected into the sector and the sluggish pace of growth exhibited. This sector has been unable to hit 5% GDP growth over the at least past 12 quarters. Now, promoting technology and training farmers will have a lasting impact on the sector. In what ways would you say technology as well as education can assist with boosting growth in this sector, and then allowing us to see that translate into the national accounts as GDP growth?
So, intensification and spending has never been an answer, because, it's like, a blind whack-a-mole. if you don't have a kind of an idea where you're heading, you're definitely not going to get the desired results, especially when it comes to economic parameters and GDP like goals that Nigeria has and wants to achieve through an agricultural economy, which actually is what employs and engages majority of Nigerians more than any other sector. If you look at technology and how it can help, to answer your question specifically, I could start with something as simple as agricultural data. The CBN and the federal government, like you've rightfully mentioned, is spending billions year in, year out, and has been spending millions for many decades now, but more now than ever, without the corresponding results, simply because starting with the application of data, technologies in agricultural information and data, we're not getting it right. The CBN, the Federal Ministry of Agriculture, and most of the agencies in agriculture do not have substantial agricultural data ranging from farmer information to agronomic data, historic and forecast data, to weather and climatic information, to market prices and commodity prices, historical and current. These things are essential. In every sane economy, you have to use this to kind of know where you're heading. Nigeria is sadly not doing that. Every year, we just think that we could just open an Excel sheet and fill it with numbers of people and their BVN, and then we wire money to them and probably give them, farm input. Most of them are not even farmers, and we have no ways of verifying. So our digital economy needs to come in here. The things that make our digital economy need to come in here and sort of validate this agricultural revitalization that's going on. Now, regarding farmer training and farmer education, or even agricultural education across the value chain, because when you isolate the farmer like we usually do, you run the risk of having them not producing to a specific market. And what you want to do is to have a market-driven agricultural system or agricultural economy, which is sadly not happening right now. You can clearly see most of the success of programs like the Anchor Borrower program. It's just because it's hinged on an anchor. And even though it has its faults, I think the design is immaculate. It's really great. It can work if implemented properly because it is somehow market-driven. Now, in our market drive, we need to make sure that we get farmers and the other stakeholders of the agricultural value chain, like the input providers, like the financial institutions and insurance companies, and all the other people that make the sector tick, are knowledgeable or learned on a specific market. For instance, there's a market for, let's say, rice, which everybody knows, right? However, if the farmers do not have the knowledge in terms of the right agronomic practices and the right storage practices and even the right financial practices to actually have a good rice farm or rice production system, then that market for that rice will not be there, because I will not eat the rice that is not well grown, at least a specification that I want as a market. And at the same time, the bank is not going to fund outside any public sector arrangement a rice that is not marketable. So that kind of correlation needs to be there between the market, the formal markets especially, and the smallholder farmers or the majority of farmers, whether smallholder or commercial. So that education is really essential. We need to get back on extension and especially use technology to extend to farmers. Digital technologies have been mentioned, especially ICTs, throughout this panel, and I have had the pleasure of listening to examples from South Africa to Kenya where things are happening. Nigeria has an unprecedented opportunity because of the incredible proliferation of mobile technologies to use ICTs and digital technology for extension, for farmer training, and even other stakeholders of the agricultural value chain training to kind of get this education. So really, it's not only that we have to use information technologies or general technologies to kind of boost agriculture, we must do it. It's probably our only chance if we're going to feed and sustain Nigerians.
Thank you for that. Knowledge is truly power. The heavy reliance on one commodity for its export earnings has resulted in significant macroeconomic slippage for Nigeria. Agriculture provides an opportunity for revenue diversification. Now, according to the Nigeria Export Promotion Council, agricultural exports have the potential to generate $30 billion per annum. Please share your thoughts on how Nigeria can position agric-related products for revenue generation.
So this is an issue that I feel quite sentimental about. I grew up, my father was a cotton farmer. Generally, most of his commercial farming was cotton. And in the 60s, 70s, and even in the 80s and probably early 90s, they had, an export kind of base that really was incredible. And the cotton grown in Nigeria, I think, was about the second best globally. And Nigeria amounted for a considerable, amount of the cotton production at the time. What I found out when I had studied, my father and the farming that they did and the exporting that they did at the time was that existence of, state-owned institutions like the marketing board really helped in terms of ensuring quality and also in terms of covering farmers and the visibility between farmers and the formal market that I spoke about earlier. So a farm in the Netherlands wants a specific type of cotton and it gets in touch with this marketing board, and the marketing board not only informs the farmer, but helps the farmer with the necessary financing, the necessary knowledge and technology to grow to that specification of the Dutch buyer. And the marketing board also ensures that the product is sorted, cleaned, made specific to that quality required by the Dutch buyer. Now, what really happened with our export, what deteriorated was that kind of arrangement. Along the lines, people were exporting commodities from cotton to sesame to even maize, soybeans, and other things, but the quality was so bad that nobody was really taking anything from Nigeria anymore. I think until we're able to fix that, nothing will really change. Like right now, there's an incredible demand, we know how the globe is, we know what works, we actually see the data every single day, and we know that this production happens. However, the quality and quantity in which Nigerians are growing produce for export is simply below par, and it's simply not acceptable. And until we're able to get that, the market and the production speaking together, understanding each other, we're not ever going to get it right. And I think it's not as hard as, a lot of people look at it. It's a simple matter of identification and applying of technology and coordination, which simply we have lost. And there are a lot of incentives for exports. There's a lot. Look, I keep saying this, no matter how much incentive or infrastructure you put, if the market is simply not in need of what is grown, these investments, these incentives are not going to be useful. No matter how many cargo airports you build, no matter how many tax breaks you give to how many companies or producers, if the international market does not need or require what we're growing in the quality and quantity that we're growing it, those incentives and those the infrastructural investments are not going to be very useful. So I suppose we need to look at the market. We need to make our export drives very market driven and market oriented, and we have more than now the opportunity to do it. Look at the agricultural startups that are supporting farmers in Nigeria right now. Look at the investment that you've so mentioned from both the public and private sector in Nigeria right now. The policies that are there to support it. I mean, this is the perfect moment. And coming out of a pandemic, the market, there are more suitable people to talk about the global markets than me here, but you definitely know that the next decade is going to be pivotal for any sort of country or economy that dedicates to growing what the global economy will consume.
Thank you so much for that response. Now, the temporary lockdown in some states across Nigeria has harmed farming activities as well as the distribution of agricultural products. Transport restrictions have impeded farmers' access to markets, resulting in upward price adjustments of farm produce. We've also seen this reflected in the inflation reports that have come out. The food rate inflation has been the core driver of accelerating the headline inflation rate. And that has penetrated to the markets and also affecting consumer pockets. What is your view around the impact of the current transport logistics situation on the agriculture sector? And what recommendations would you give to improve this situation?
So, I mean, I think the early days of the lockdown have really put a dent in sort of the lives of so many and the live wire of so many local and regional economies in Nigeria. Especially because I work with a lot of smallholder farmers, and so even my company, imagine here in Abuja, we suffered a great deal because we had a customer base of smallholder farmers who relied on our information and our sort of linkage to get things like farm input and to prepare for a season that was the only thing they had in terms of production. But all of a sudden there were movement restrictions and they couldn't go out, which means they couldn't pay us, one, and which means they probably would be late on their farming for the season, and which translates to ripple or chain reactions that will affect many parts of their socioeconomic existence, if you like. So I think that it was really not handled in the best way, because farmers were essential. And at that time, as we were dishing out passes to medical practitioners and to other essential staffs, I think we should have also thought about farmers, especially smallholder farmers. These people were already isolated. They already existed in areas that were, hard to reach in terms of road infrastructure and other infrastructure necessary for them to, move. And all of a sudden, after many years of telling them, get certified seeds, for instance, buy only certified seeds, do not use, reuse your grain. Now, they want to buy certified seeds, but they can't go out. And you're telling them also, you need to farm on the second week of June or May to get the best results, because the rains, according to weather forecasts, you give them all that advice, and all of a sudden they can't go out on the second week of May or June. So it was really something avoidable that I think could have been handled better. And this goes back to my kind of assertion in the first question you asked. The government needs to have the real data of these people. The government needs to know, in terms of interventions, in terms of rainy days like this, a global pandemic, you need to know who your essential people are. You need to know who grows for you. You need to know who sells for the person that grows, and to whom that the person that grows sells to. That kind of holistic sort of knowledge of the agricultural value chain enables you to see a fault. A minister, a lawmaker, even the president could just look at a dashboard and see that, in Kano, there's a break in, let's say, the logistics or the kind of access to vital input or something, and plan and intervene. And these things are not really rocket science. I know for a fact there are innovators in Nigeria that have already built tools like this, that are already using tools like this, and not using them is really just a kind of a deliberate, descent into whatever problems we call for ourselves. So I definitely think that it could have been handled better. And one way to handle these kind of things better is being informed, having accurate real-time data, and basing decisions on that kind of data. Now, regarding interventions, you very well know that the National Emergency Management Agency, right, and a lot of other institutions that offer relief have played a very important role, an ever important role in especially this pandemic. However, there too were logistical nightmares that could have been avoided. There was relief material that had not been distributed from floods dating back before the pandemic. And now we have a pandemic with a deficit of items to distribute already. And these people are already being hit by new disasters. We simply do not value smallholder farmers enough. We don't respond to them well enough. We don't take care of them not enough. And until we value them, until we know that most of our production is in fact from the people with small land holdings, with small family labor, until we understand that and we take care of them, we're not going to be able to succeed at large scale farming. And the answer is not just large scale, it's not just smallholder, it's not just biotech, it's actually a combination of every farming system or method that we can lay our hands on, from livestock to aquaculture to agronomy and all the other facets of production in agriculture.
Thank you so much for that response. Thank you. So I'm going to go back to Dr. Omobala Johnson. I would like to get a 1-minute view or 1-minute comment or your closing remark in 1 minute.
In 1 minute. I mean, I think my closing remark is that, look, for the digital economy, because I haven't spoken about the other side of what I do, which is investing in tech companies across sub-Saharan Africa. And I think the other side of the digital economy is really looking at these companies that are solving massive, massive challenges across the continent and ensuring that they get the kind of capital they need to grow. I just want to give an example of what Nasser was talking about around small-scale farming. Small-scale farmers are very important in Nigeria and many African countries. That is how we grow our food. Is small-scale farming. It's not large-scale industrialized farming. We are, there's a company that actually provides insurance to these small-scale farmers, because sometimes they plant on a particular day, there's a flood, there's a drought, they cannot afford to buy new seed to replant. So they give these farmers insurance through government programs. They get insurance to these farmers, and they do all these wonderful actuarial calculations that actually tell them in terms of yield, in terms of losses, and they're able to provide insurance to these small-scale farmers around if you lose your harvest, if your yield is not as high as it should be in a particular area. They give them insurance, and that helps to keep them continually in farming, because these people are very, very poor, and one harvest loss, one flood, one drought actually just throws them back into poverty. So technology can help in many of these areas around e-commerce, supporting medium-scale businesses, small and medium-scale businesses through lending, health insurance, making health insurance more more accessible, so that you're not paying a 1-year premium in one go, which many people cannot afford. You're paying your premiums on a monthly basis, and you can do that with mobile technology. So that's the last point I want to make. It's around, let us have the domestic capital that will support these amazing technology entrepreneurs that are building companies that are solving grand challenges across Africa: health, education, agriculture, commerce. That's what we really need to do, in addition to infrastructure and all the other things that my co-panelists have said. There's a lot that needs to be done around the digital economy. And I think one major part of it is really around supporting these tech companies to solve these challenges, because we have that tremendous mobile infrastructure across Nigeria that allows us access to many Nigerians and anything else in the country today.
Thank you so much for that. Mr. Anthony Ofuta, can I please get your 1-minute closing remark?
Right. Thank you. Just to reiterate that there is a lot going in the technology space, and definitely, as all my co-panelists have mentioned, there is a lot that we can also do in agriculture as well as in health. But I think there's one thing that underpins all this, and it is about investments and how to drive the economic growth in Nigeria. Today, our stock of capital formation and investment growth continues to be very low. If you consider the relationship of the average investment to GDP or gross domestic product, which stands at just about 15%, and a projected growth rate of 4%, and then you just oppose it with a growing population. As at 2018, that was about 2.6%. It becomes very clear that drastic change is needed in mobilizing international as well as domestic sources of capital. Now, for this to happen, the appropriate framework has to be in place, and that is where the government comes in. So it's not about policies anymore. I think we have too many policies. It's now really about implementation and providing the enabling environment that is built on trust to then attract this international as well as local domestic sources. One thing that is very clear is that, and I gave the example of the diaspora remittances, it's clear that there are sources that we can harness, but private capital also is very fleet-footed. And in comparison to what we've attracted so far versus what we have remitted, that's the 50 million diaspora Nigerians, there is a place that we can harness. We have to think about these innovations to attract, and it's about incentives, proper implementation, government becoming more of an enabler rather than a hindrance to attract the investment into the telco sector that needs to grow it. It's already grown exponentially, but we need to then spread more. Also attract the investments that we need as we go into, as Nasir mentioned, some of the things around technology in the farming space, as well as farming extension. All this needs capital to flow into them, not to talk about the fintechs. And the fintechs really will be the platform and enablers to bring together the investments and channel them to the places where they are needed. A healthy population, as I was growing up, also that a healthy nation is a wealthy nation. And I think that is something that is really very, very crucial today. So listening to Mrs. Laoye, it's also clear that we need to drive a lot of investment also in the health sector if all these are going to succeed. So for me, the one word now is investment, and how do we attract in the sufficient quantity and in the sufficient tenor to drive our growth aspirations. Thank you.
Thank you for that. Thank you. So I'm going to go to Mrs. Fola Laoye for your closing remark. I also have a question for you from participants. And the question is, if you can infuse it into your closing remark, how can we override policy constraints to scale up access to basic health need of the people?
Okay, sorry, did you say quality constraint?
Policy constraint.
Policy constraint. Okay, got it. Thank you. Okay. All right. I think everyone has touched on it. I think again, Mrs. Johnson particularly has raised the issue of technology and what technology really offers all sectors, and healthcare is not to be left out. I think there are key areas that technology helps us, as she said, in helping us build access, financial access to being able to pay for care through health insurance. Certainly being able to deliver what I'll call last mile access as well through telemedicine and remote, consultations. And then of course, also being able to really build what I'll call like a learning, access. Really, we know that one of the things we've lost, like we said, through the brain drain is our capacity. And it's very difficult and very expensive for us to want to try and train healthcare workers. So leveraging on technology and being able to do more with e-learning would also be important. But as part of that, I think for me, the one word is, how do we really enable what I'll call a healthcare marketplace? Healthcare is looked at as a public good, as it should. Healthcare is the right of every Nigerian. It truly is. But at the same time, I think we have to really realize that when we think about how healthcare is being funded and how it's being provided, a lot of that is happening more and more in the private health space. And therefore, or shall I not even call it private so much, but in a market-driven health space. And therefore, how can we really move and think about healthcare, from a market-driven perspective? And I think, back to that question of, how do we really sort of unleash the shackles or the constraints to grow the healthcare sector. It really is through this type of thinking where we can think about how can we bring private players more into public programs. Certainly, whether it was in the COVID pandemic, in different sort of in disease programs and so on around the country, I think the use or the introduction of private health players to help to deliver those services would be really welcome. I mean, if I use COVID, for instance, in Lagos State alone, we have over 3,000 primary healthcare, players in the private sector. But it took quite a while before the private sector was really embraced to say, let's give you also the knowledge and the tools to help to fight COVID. And I think those are some of the things we need to think about. Similarly, policy making, even as we're thinking about what policy should look like, can we have more private healthcare players at the table? And then finally, on the issue of investment, what are the things we really need to do to drive the private investment? Because we know that this is long-term capital and patient capital we need. And we need to think about what incentives can be put in place to really make sure that the investment comes in and stays in as much as possible. Thank you.
Thank you so much for that. So, Mr. Nasir Yamama, please can you give me your closing remark in 1 minute?
Okay, well, contrary to most of the panelists, for the first time, I feel systemic change really cannot be achieved through the private sector. I don't think any amount of investment or good business could really create the kind of change that we require. I think we need to ask more of the government. I think the government needs to do better. We need to get more efficient people, if you like, in terms of the kind of reforms and the kind of sort of systemic change that we require to see in health, in agriculture, in technology, and all of the sectors that we spoke about. I think it was important for me to kind of say that. It's something that I have not believed until recently. I used to think that business was the greatest avenue for change, and that it could probably be the silver bullet for Nigeria, but I totally now see better, and I believe that systemic change can only be achieved through the public sector and a well-coordinated public sector. So yeah, thank you so much.
Thank you, thank you. Thank you to all my panelists. Thank you for sharing from your extensive bank of knowledge. I've gained so much, and I know that everyone logged into this session has done the same. Thank you to everyone that has logged into this session and joined in the conversation. So I guess it's time to close this session. Thank you, thank you, thank you.
Thank you. Most welcome.
Thank you.
My
Bye-bye.
pleasure. Bye.
Thank you. Bye then.